Hi guys, a very quick look at US30 aka Dow Jones. So in previous videos I spoke about how we had an overextended W structure there with the neckline being there, and I mentioned that this whole movement downwards was to retest or rather test the neckline of this W structure. And I also mentioned that the reason why we have this current candlestick right here is because of the previous month's candlestick, which was a liquidity candlestick. So there was a whole lot of money sitting down there. Hence, we saw this current monthly candlestick coming down to grab that liquidity as well as to retest the neckline of that um, overextended W structure, right? I had also mentioned that in this region we have an inverted head and shoulders pattern with the neckline being somewhere there. And I said that we might see price coming down or rather coming up to the neckline to retest it. And we may be looking for further selling opportunities at this point, right? And who knows, maybe price may get to this level here because of this candlestick, which is also a liquidity candlestick. Nonetheless, let's move forward. I'm just gonna head to the weekly chart from here. So here we are on the weekly chart. So what do we see on the weekly chart? On the weekly chart, we had in this region an overextended information with the neckline being here, right? Price broke the neckline and then went back to retest the neckline. Currently, we can see that the current or the previous weekly candle um, actually seems to be, or rather, has broken the support line, or rather the neckline of this M structure, right? And as I said to you guys, that because of this M structure, we would have loved to see price bounce off that neckline and then push further down, right? Um, what else do we see on this chart that is particularly interesting? I don't see anything further. Um, but I know that a lot of people are seeing this previous candlestick, which is a very, very strong bullish candle, and they are thinking that the bearish market may be coming to an end. Nonetheless, we will see how things unfold within the next couple of weeks and months. But from here, I'm just gonna move down. I'm just gonna move down to the daily chart. Before I do so, however, I think let me just add a neckline to that overextended information. We can see that this is our neckline. There we go. Then from here, I'll just move down to the daily chart. So here we are on the daily chart, and the first thing that I'm going to do is just add my channel. Just bear with me, guys. So there goes my daily channel. Let's see. Just bear with me, guys. There goes our channel on the daily chart. I'm also going to draw a trend line, an inner trend line that is. Just bear with me, guys. There goes our inner trend line. There we go. There we go. So let's see. So what else do we see on the chart that is interesting? So we had in this region a gap, as you guys can see, and it may be that this whole move to the upside was to just grab that liquidity that was sitting up there. And because we had an information here, and on the weekly chart I said that would love to see price come back here to retest this neckline of this information. We may see price actually, excuse me guys, we may see price actually moving further down. And the reason why I say so is because we also have this candlestick over here, which is a liquidity candlestick, and another one over here, which is also a liquidity candlestick. right? So um there goes our information, right? The neckline is here. um on the weekly chart, I mentioned that price may have slightly um protruded the neckline, which is not necessarily a good sign, but it makes more sense here because we had a gap here, and we know that this whole move was to trigger the liquidity that's up there. So the next move may be that price may actually push further down, right? And what I'm going to do now is actually add the Fibonacci retracement tool just to see if the neckline aligns with any of the key numbers that we have on the tool. Just bear with me. There we go. So can you guys see that the neckline of this M structure aligns with the 50% Fibonacci zone, right? So that's a very good thing. That's a very good thing. So it tells us that we may actually see a retracement. We may actually see, let me just delete this Fibonacci retracement tool. We may actually see a retracement, and that is because we have an information here, we have a neckline there, and the gap has been filled, and the neckline aligns with the 50% Fibonacci zone. So another reason why I say we may see a retracement there, excuse me, is the fact that um, we have these two candlesticks over there, which are liquidity candlesticks, and the market needs to grab that liquidity at some point. Let me just add lines to those two candlesticks so that we don't forget about them. There goes the first one. Just bear with me, guys. And here goes the next one. There we go. Right. There we go. So what else do we see on this chart that is particularly interesting? Another thing that is interesting is that, and I think it'll be better visible on the H4 chart, and that is that we have in this region what seems to be a W formation with a neckline there. Um, because it's a W formation, a lot of people bought in this region and others bought on the break of that neckline, putting their stop losses just below and at the bottom of that W formation. So over and above us having these two liquidity points, we also have a lot of liquidity at this point in the form of stop losses, and the market may come down to grab one of those stop losses and then possibly push further up, right? Anyway, let's continue. Is there anything else on the daily chart that we see that is particularly interesting or important? We also have here an information with a neckline there. However, at this point in time, we can just disregard it because the most important neckline at this point is this one, as well as this huge M structure over there. However, should price close above here and also break this trend line, then we can start thinking about this information as well as this neckline. But for now, let us just disregard it. I'm just going to head down to the H4 chart. On the H4 chart, I'm just going to fix my lines. Just bear with me. There we go. There we go. There we go. Right. So here we are on the H4 chart. So on the H4 chart, we also have some liquidity candlesticks there, right? And this also tells us that the market has to come down to that level to grab some liquidity at one point or another. And I also said that this inverted head and shoulders pattern or double formation would be better visible on the H4 chart, and it is actually. And we have a neckline over there. So what I'm going to do right now is actually add a neckline to that formation or inverted head and shoulders pattern. Just bear with me, guys. Excuse me. Let's see. So there goes our neckline, more or less. Right. So um something interesting is happening right here. Remember guys, I said that we have just bear with me. Remember I said that we have that huge M structure with a neckline here. We also have this inverted head and shoulders pattern or W formation with a neckline there. So can you guys see that both structures, the M structure and the W structure, are almost or more or less sharing their necklines in the same area. So this would make it a very dangerous area in as far as buying or selling goes, right? Unless if you are executing your trades on the smaller trades such as the M15, the M5, as well as the M1 um, charts, right? However, if you're executing on the H4 and above, it makes it a very tricky situation in this region, and that is because, as I say, both necklines are too close to each other. They're very close to each other, so it would make things very risky um, unless you're trading on the, or rather executing your trades on the smaller time frames rather. I would not be looking for any opportunities at this point. But like I said, because we have that huge structure and this um, neckline as well as the 50% Fibonacci zone, chances are that the market will retrace at more or less this point and then push further down. So one needs to be cautious. So the next thing that I'm going to do is just add my um, channel on the H4. Just bear with me. There we go. So is there anything else that we see um, on this particular chart that is interesting? So over and above us having this formation here and the neckline there, we also have another W structure here which shares the same neckline with this huge W structure, right? We also have this candlestick over here which is a bullish candlestick with a small body and a long wick. So what that tells us is that at this point we have a lot of liquidity there, and that what we may see actually in the coming week is that price may actually move further down slightly and then push up to form an M formation and then push further down to around the zone. That is what I will be looking for in the next coming days. An M formation somewhere here and a retracement back to the neckline of this W structure. Let me just repeat that. In the next coming days, I will be looking for a possible information. Sorry, let me just go back a bit. Oh, in the next coming days, I would like to see price push further down to induce more selling, and then push further up to form an M structure, and then push to this level over here as number one. The reason why I say this would be the first take profit zone is because we have touches here, one, two touches, and a third touch there, and I know that a lot of people will be looking to buy here, right? Seeing that this would be the fourth touch, right? But keep in mind, as I said, guys, that we have this level over here as well, which is a liquidity area, and we also have this level as well, which also serves as a liquidity area. I hope that makes sense, and I hope that that is clear. I hope that is clear, and I hope that it makes sense. So nonetheless, let us proceed. So is there anything else of interest or value that we see on this chart? Is there anything else of value or interest that we see on this chart? Um, I don't see anything else really, guys. But just to reiterate, we have a W, rather an information here and a W formation here, or an inverted head and shoulders pattern there, and they are both sharing more or less the same necklines, or their necklines are almost in the same area. So if you are going to be executing your trades on the H4 and above, this would make it a very risky area to be buying or selling. However, if you are executing on the smaller time frames, such as the M15, M5, as well as the 1 minute chart, it is not so risky, right? But as I said, guys, at this point, what I will be doing myself is waiting for price to actually maybe bounce off this trend line slightly on Monday, and then on Tuesday we might see a stop hunt to the top, and the market may form a small M formation and then push further down to maybe this point. And that is because we have two touches here, we have a touch there, and this would be the fourth touch. And a lot of people are gonna be looking to actually buy at this point. However, this could be a trap in that the market may also bounce slightly off here, go back up a bit to induce more buying, because people will be seeing this trend line, they will be seeing the first touch, the second touch, the third touch, and the fourth touch. And the market may push slightly up and then push further down to these zones that I spoke about, right? So we just need to make sure that we know what's happening in the market, and that um, we expect anything to happen, and we just react accordingly based on what the market is doing. I hope that makes sense, guys. So, excuse me. So that is my analysis in as far as US30 goes. If you have any further questions or comments, just do let me know in the relevant sections. And thanks for watching, guys, and peace out.